Taking more I have all the history and relating them all the dance. Convey Bhavendra, Mukesh Johnson, Ajay Guna, Vijay Ayyasan. And the moment of the lecture is Arun. So I'm finishing my shadow all the way on the story to a very good over the
We have one thing that we want to offer every month before we continue over to Arun to weeks. I just want to extend a very warm welcome to Mr. Kamlesh Pathak. The reason I wanted to stay, spend a minute was I just wanted to acknowledge that in last past 3 decades, we had budget debates, but I haven't seen very budget debates which have been as inspiring as this one, not because it's on an IFA platform, but just because we have the tradition to have the people who are responsible for the budget and the people who are affected by the budget come on a common platform, one their views, including victims of risk, and more importantly, those victims of data and forward. Maybe present of Mr. Marke and his colleagues and listening of all the we are having this program which is virtual as well as physical. And we have about 50 registrations online. This excludes 25 registrations for one day. And I'm about that we can them. Now we have all the UPI pages. Psychology for always a pleasure to be here. The analysis that today very good. We can possibly protection for the daily body. And then we mandate for very unlike getting the person for delivery exactly 11 years back. And the Vodafone deadline came 12 years back. And they needed 2 layers of protection. But today is running and running. Let's go to the daily development. School government market. A report came out of the newspaper additional concern so the budget has been as in a way a positive surprise because there is no regulation. How do you have two, three, 4, 5 on the and it is very amazing. The reason I'm mentioning it, then I go again in the countryside, 2.4 and 4 also. 20 billion dollars has been done. It happens so long eating, no. Including the stream was this like the day after the budget is there one after I want to expensive. So if I don't know which I will be value today, the prediction we will need to value. Other things if I'm not develop you may say that systems extremely processing. Also, we have agricultural data on looking for which finance minister or finance ministry having bullish on tax commission for over tax commission. I held up last year with 10.5% tax commission was very conservative. I think this year also there is underrated. I think tax commission underrated mentioned. And the reason I mentioned last year was twofold. Because of COVID, a fair bit of small and medium enterprises were either driven out of business or were in losses. Those revival occurred in financial year 22-23. I don't know the data, but Mr. Ashti will the data. How much of these tax payments are coming from not the large companies, but the mid-sized and small companies. The other bit of surprise that the media communicated was the tax collection on non-profit side. Personal income tax collection. I was personally not surprised because the compliances on individual taxes was around the world. And some of these effects are host of measures that have been implemented in the last 5 to 6 years, whether it's implementation of GST or post regulation scheme or even post COVID when individuals when whether they are self-employed or they are employed. So and also the non-tourism questions. My overall conclusion is that whether it's derived from the living tax, these collections that we have seen in financial stability in laying down different base altogether, and the effect of this may be felt positively for the government.
One provision is where we expect it to be correct more than, and one provision is there it will be not.
I was expecting, well, the markets were expecting the leadership of today's staff. I was personally expecting a rationalization of over so that's something that we not there were no surprises, there were no shocks. Maybe there was debate on whether the issue and the evidence that's not. So it doesn't impact me, but it impacts a lot of higher growth plans. So I think that's something better than maybe
so for me, I think the big picture is maybe the point that I will make in terms of the investments and the non financial part of the budget. But the other talking about is also some perfect growth in it. I think that observation of the financial sector is something that we all need to align on because we don't see the inflation being high at the same time. Maybe the growth rate market and what the so we have seen repetitive here so there will be a greater push towards accelerated growth very all of us as practitioners and all of us in the industry will be doing more promotions for some of these challenges of money. In terms of the tax provisions, in the long that too much to do in budgets. This thing will be the same. But for me, I had a personal interest in how the process. One big change is on the same capitalization rule for MBA, which was very critical, and I was, I mastered as well as the other team members who have pushed this through. It's not going to be a language. That's a very important.
Maybe progress on the various things important by a company time. 9 years back on this government is going instead of getting the 10 projects to them, completed 2 months around the project. They said no negotiable tax putting, they said no tax adjustment, we taxpayer friendly, and you have an administration which will be pro-tech and policy making which will be proactive and which will be sensitive to industry concerns. 10 years, server 10 years, not having even the budget is not
So I think the trend is exactly what this is. As people from the industry, we feel that things can be more agile and can do a bit more than all of this. So I think non-resident is certainly the agenda. There's no doubt on that. But it's implementation on the ground becomes difficult. It's a very large engine to control. So I would say that it is working effectively, but there are areas that we can still fix. And agility also will come a bit more if there is more engagement with the industry. So I think combination that when you look at policy making, it's not an easy exercise, especially when that. So in that sense, it's still depends on them on that.
I think it's not one space, so no work is for the the wrong extent is on the so only person is
Absolutely. Yeah. So, I will not continue to undertake the financial process. Yes.
So basically, somebody asked me question कि ये क्यों कर दिया 42.7 से 39। तो मैंने कहा कि इतने सालों से ये मुझे प्रॉमिस कर रहा था कि अपने घर जाके पार्टी देगा, तो अभी तक नहीं बुलाया। मैंने कहा अब तो बुलाएगा, उसके बाद भी नहीं बुलाया। तो फिर मैंने सोचा कि ऐसा क्यों हुआ, तो देखा बजट, फिर मैंने बजट ध्यान से पढ़ा, तो उसमें मैंने देखा कैपिटल गेन बढ़ गया, इंश्योरेंस का हो गया, एमएलटी हो गया, बिजनेस ट्रस्ट हो गया, टीसीएस और एलआरएस हो गया, इसकी वजह से इसने अभी तक नहीं बुलाया।
So I think that was a good roundup on a lighter note. I will take off from where Vijay said. I would say that so far as the legislative side is concerned, so far as the policy-making side is concerned, we have seen the Central Board of Direct Taxes in proactive mode. And I must compliment the way and the speed with which circulars are being issued, clarifications are being issued, in order to make sure that there is not much gap in what understanding of the legislature is, what is normally understood in terms of interpretation of law. But two things that I want, and I think I compliment the what Arun said, this probably this probably is like how the steamroll like but there are 2 points that need to be addressed, and I think that's nothing to do with the budget. One, according to me, is we must expand the tax base. I think that efforts must be put in, and I see no reason why people should not be paying taxes here. People are earning substantial sums of and substantial incomes, and they clearly and happily stay outside the tax law. I think that focus must be there rather than on people who come and voluntarily file their returns. Today, the entire energies are concentrated on people who come and dutifully file their returns. That I think must be done. That's point number one. The second is there is much gap between what is advocated as a policy and what is implemented at the ground level, to which India also alluded. I think that is leading to substantial litigation. That is leading to substantial areas, and that's clogging up the justice delivery system. I have a benefit of the litigation that happens day in and day out, but I at times feel so helpless, and that this is very unproductive litigation. It is not something that I have time to do despite earning the fee. And one can see the pain that the client goes through in the entire process. So I think these are two points that need to be fixed at the earliest in order to get the system rolling, and in order to ensure that India is an active nation. Not very surprised. I was telling somebody between the start to finish for a mental design to see what it can take 35 years. No tendency to have that kind of patience. He's waiting for and it is to know that one. So I think this needs to be done. Therefore, and the long term we don't have to try to so on the budget front, we complement but I was speaking for myself, every budget is actually an opportunity to learn.
I was already, I think a lot of people are ready to buy for you. Continuity and consistency. So in terms of last 5 years, there have been much to crack down on tax evaders, more anti-awareness measures, measures to clarify intention issues and more. So we want to create what are the things when we try to put the budget and any factors exactly what the things that you are looking to.
So like we have here, how we revenue the process. But first of all, thank you, IFA, and thank you all.
I will always look forward to the session with IFA because that really gives us very good feedback. Feedback so far as quality is concerned and feedback so far as drafting is concerned. Nobody is perfect. There will be mistakes in the drafting, but if we get a feedback, we get an opportunity to look at it again. So this time, it has been a very kind of this budget where we discussed every suggestion and here. We received lot of suggestions from taxpayers. For a change, we went around and we to get suggestions from all of officers. Number of suggestions that we received from both sides. And we discussed each of those suggestions, with the higher officers starting for the month of November itself. Many times we, by discussing we went far with the midnight. So it was such a hard task which we went through. And first of all, must compliment all the team members who contributed to this. We have three of them sitting here. Minali is here, Ravi is here, Jimitesh is here. There are some others who have also come, but because the parliament session is going on, so they have to be there in the office because Monday and Tuesday is finance ministry question day. So the questions that have been asked by MPs for Monday and Tuesday, we have to submit the file today. So, they also wanted to come here because I have told them a lot of good stories about interaction I have had with IFA in the past. So, thank you for that. So, every suggestion, some people might feel that they gave a very good suggestion, but they don't see it. But I can promise that every suggestion was given full consideration, and then comes what is the theme of the budget, because currently carry out so many amendments. So theme was continuity and stability. That was the basic point that we started with. So idea is that it should be too many amendments. You might be 120 clauses in the finance bill, but actually they are 60 only because the remaining are consequential amendments. Just the one kind of resulted clauses. So you understand that it might be 22 clauses for a higher taxes, but when you actually start committee, you will find that there are not too many clauses. So that's a continuity and stability. And we have a clear focus in the mind of the central government. We must give relief to middle class. And furthermore, that middle class must get relief this time. You can see that the form of personal income tax reform that we are taking, and probably will discuss that more in detail later. The two points that has raised today, if you see a policy of the government, that we will not introduce new tax. This is the government which has challenges during COVID, and why this government, every other government of this world has challenges. Because revenue went down and expenditure went up. And the government had to take care of the citizens. It had to provide food, had to provide medical to all of them. But every we go with it. So, all other and we will carry on with whatever reforms we have education and effect and you see the policy, but our policy has shown in last 2 years, it is one of the biggest steps that is needed. We have actually this is what that. It's not enough.
there is debate in everyone. It's lot of good for it. But is one of the management of the collection is it is because of the town, some standard to document use better. Also, with the power of involvement. The biggest problem is to get here. And again, we use that information in our pocket, ensure you get that converted, and then use the value of this information. On the other side, now, we have already started. And even before that, your e-filing account is all and so that means go notification to some information they can take little later. You know, if you see that it is not actually not is not doing that you can you please explain? You will explain it because it is right. So correct. So matter we can go or you will also realize yes. We don't do it. It is not so you might have been able to so over many of the and we find
ये कैसे चलेगा we do come
so this is how government is able to collect more revenue so that it can do its and it is to take business software. They want more access to the finance, to the revenue, we want more people to do it. And needs to be forward and coming really has to go off the community to what I think. So, need to be one of the activities. And they want to be taxation of the water law, the communities. Feedback. We made decent progress on the lab before the exam. We also we make good progress. The challenges that most people are doing when have been all the aspects. Because the 2020 election is not there. Okay, now we are trying to get to the legal of almost very good. But I think somewhere the after the budget, that was working on. It's not uncommon. And so really that the figures against that. They are not even figures for the 2020 machines. then we are following the current. That's good. But is it the by when your last question? He said two things. He said, how many people opted for the regime? And he said 1/3. And he said the challenge is, maybe Mr. Ashton will be able to explain this better, is the people who are aware the benefit of housing reduction, interest on housing. He said that's where the element is. So even today, if a person is aware of housing reduction, assuming that he is aware of full reduction, which are really only 1/3 of the million aspect, and because most of them in a finance is press interaction history. Then we have to get the question. In other words, today, the old regime under 2023 is beneficial only to 1/3 of taxpayers over the rate of the housing regime. So I just want to add that comment. And I think the time has come for people to assume that the future will be the regime. The people exemptions for elections. For people. Option is we are making a new yes, no, but I think to be for the small taxpayers. Government is saying deductive taxation, they raise the limit of the so for people who have some deductive taxation, professional earning of 71 lakhs or MSME have a turnover of 3 and deductive taxation of 6%, he is no longer paying having but the philosophy but I think that the new regime 2023 becomes more competitive even for professionals as well as for self-employed. But standardly it may be an issue for those who are very eventually I'm going to see the new regime being the only regime that is going to be available. The direction in which we are moving. I would say not what versus this point of time. Let's try to understand I would like to say that first of all, the new regime is not first of all, it is completely in line with what was announced by this government in 2015. Now we all know that the exemptions, particularly profit incentive, area-based incentive, they lead to distortion. Distortion in the sense, if you give area-based incentive for coming out with a factory in location A, the investment will shift from B to A, B will suffer. So this was the reason if you see many studies in IMF and World Bank, we see they all suggested developing countries should move away from incentive. In 2015, this government announced we are going to move away from profit incentive exemption reduction and we will lower the rate. It is good because also and then you know the things and what are the
ये किस
because what can we get more the next year
प्रदीप से बोलो वहां बैठे बैठे ट्रेन लेकर वहीं पर ही माइक ऑन लगा रहा है और फिर कैमरा ये स्पीकर के साथ है वो प्रॉब्लम इसमें स्पीकर से प्रॉब्लम तो नहीं होगी
And the law has. So break even point was 2 lakh. When I say 2,50,000 break even point means. That if I have certificate of extension 2,50,000, then I will go to the old regime. If I have it less than 2,50,000, I will opt for new. That is the scenario as of today. Now, that 2,50,000 turns out to be 2 lakh because 50,000 is taken away by standard deduction. So virtually 2 lakh is the break-even point, and you will find most of the people having exempted deduction above 2 lakh. So therefore, you will find new tax regime less attractive. And this study which I am saying 2,50,000, it is for 15 lakh rupees annual income tax payer, which is a reasonable middle class. Now for that 15 lakh rupees annual income tax payer, this break even has got increased from 2 lakh to 3.75 lakh, nearly double. And that is where the optimism is, that why people will prefer the new regime. How many people have exemption deduction to 3.75 lakh? That is point number one. Some rich people may have, but if I have an income of 9 lakh, can I really save 3 lakh under these schemes? Or even housing loan interest? What do I have for actually consumption? For meeting my social obligation, family obligation. So you will see, actually, if you see the number, there will be very less people having more than 3 lakhs of exemption deduction. For writing in the paper, writing article, and for social media, you can say 9 lakh income, 4 lakh rupees this deductions. So 5 lakh under the old scheme, I was not paying any tax. Now with 9 lakh under the new scheme, I will pay tax. So it is not beneficial. That is only for that is only imagination. That a person who is earning 9 lakh will have 4 lakh of deduction. It is not practical. Some people may have, but probably because they don't have family responsibility or anything, maybe because, either they are not disclosing their income properly, or because there are many members in the family who are earning, so one member can do this. Others are taking care of the family. But that situation could be very rare. So you will find that is where the optimism is, that most of the people will shift. Of course, the 3.75 lakh that we have right now is for 15 lakh. When you go down, it will be less. For example, for 11 lakh, it is 3,12,500. So, this is just an illustration. But the fact is that not many people will have these kind of deductions that high, even including housing loan. Yes, 1/3 people may be claiming housing loan interest, but not 2 lakh. That 1/3 includes people who claim 50,000, 60,000, 70,000. Because this is actual. It is not something like you invest in something and you claim 1,50,000 of ATC. It is not like that. So our estimation is that both people will come in new regime. There is one simple question: why do you want people in the new regime? Yes, simple. Yes. Now I was coming to that even another one. Why do we want people in the new regime? Because it is simple, number one. Number two, litigation is less. When you don't claim anything, why do we have to, see whether your claim is all right, raise an assessment order? There is a fraud going on somewhere in the south, where fake ATC certificates are given, fake certificates are given. We don't have to look after them. It is simple. And more than that, this extra money which is left in your pocket under the new regime is all choice what we want to do.
Whether you want to consume, you want to invest. And you want to invest in the instrument that you want to invest, not because that instrument is under ATC. Why should ATC distort your choice? If I am a risk-taking person, I would invest in mutual fund or equity. I won't look whether mutual fund or equity is covered under ATC. If I am a not risk-taking and a long-term horizon in my mind, I will invest in PPF, which is giving me tax-free 7.1% interest, absolutely secure, risk-free, tax-free. So it's my choice. Why should it be somebody else's choice? Please buy my product, I am giving you ATC. Why should somebody else? It's not my choice. Okay. Perfect. That means that a lot of insurance company stocks are tanked. That's collateral damage. Ajay, personally, what do you prefer? Hold on.
No, I don't have a choice.
I don't have a choice because this is not for a business income. You have to choose once in a lifetime.
Yeah, I come to that. Yeah, sorry, I covered that.
So therefore, I am not in its present
Any focus,
No, I would appreciate this. The way I think Bhatia sir has explained it. It's a matter of your own individual choice and you can make the choice every year. So you do your maths every year. If you want to be under the old regime or the new regime, I see not that.
So I come to that question which Ajay has raised. So for business, if you have already made a choice to be under the new regime, now you will have a fresh chance. Past is forgotten. Past is forgotten. Now your default is old regime. And if you are a businessman, you will continue in the default is new regime. And if you are a businessman, you will continue in the new regime till you make a choice for the old regime. Once you make a choice for the old regime, you will continue in the old regime. And in your life, you can only come back once, back into the new regime. No, again, new regime, you are not moving to the new regime. New regime is a default regime. When you are under the new regime, you have not exercised your choice so far. This is the default option. You will continue in this new regime, continue 1, 2, 3, 4 year 5. Then suddenly year 6, you realize I better go back to the old regime. Now that is when you will exercise your choice. So you go to the old regime and after that you can come back to the new regime once in your life. Now why? Why this? But for salary it is every year. Salary you choose every year, whichever is more beneficial. You can change new, old, new, old, whatever, whichever way you want. But why for business this restriction? Because I may select old regime today, take accelerated depreciation, everything, and after taking everything 35 years accelerated depreciation, I go to the new regime to take better tax rate. So that's not clear, you know. So that is the reason, because in business there are certain deductions which are time deductions, not yearly deduction. For individuals, these are yearly deduction. It this, that, it does not impact other years. For business, the extra deductions which are allowed under the old regime will impact your deduction for the other years. Therefore, this restriction in business. Perfect. So rationale is clear. Fewer deductions, lesser controversies, more certainty. Beautiful. Mukesh, can we want to add something, or we can move to the next one? Mukesh, I want to ask people if there is any drafting issue in this. Let's personal income tax. Anybody has any question? If you find any drafting issue, there is some inconsistency in the drafting or anything, please. We also want some feedback or something. How many here are going to encourage your clients to move to the new regime? Good. There is some more work to do. No, but it is, as Ajay said, you will look to a spreadsheet. Someone will be used on the old, depending on what is that. You just have technology. So, but if the I have asked, you should ask how many of you will still remain in the old regime? How many will still remain in the old regime? A lot. But I'll be honest, if the arbitrage, Kamlesh, by winding up the discussion here, and there are a lot of topics, we cover a lot of ground, but I think a lot of it, Mukesh, seems to be psychological and emotional. Even when I was talking to the staff in our office, it just seems to be that, no, we don't want to let those deductions go. I think it seems to be more emotional than anything else in case of when it comes to deduction. When you file your tax return in July 2000 and you file another old regime, you that you must tax. If you go to the new regime, you will pay less tax. Okay, very fine word.
No, I just think that maybe we benefit for marketing of the new regime. Because maybe the desire to promote the new regime is very evident. But I'm not really sure whether.
The desire for the new regime is very evident from the enthusiasm, but I'm not really sure whether that enthusiasm is translated into willingness on part of the people at least sitting in this room to move to the new regime. But I like it, but I'm like saying maybe a little bit of trust deficit. Maybe the taxpayer saying government itna push kar raha hai, matlab kuch to. No, but I like Mr. Vajpayee's suggestion that if next year individuals are going to get a free tax return in which both the options will be given. I think then it becomes a very easy exercise for the individuals to make the choice. Yeah. The next one is long term. There is a trick here because you have to make a choice to your employer also, right? Oh yes, pardon me. At the beginning of the year. You have to. It doesn't matter. I don't even tell my employer you want to get more tax. That doesn't matter because I have interest income on which I have to pay advance tax, and if I don't pay advance tax, I incur 234B interest. So it doesn't matter. What you tell your employer and nothing to do with what you opt at the time of filing of return. There is no condition that if you tell your employer old scheme, then you can't take new scheme here. Yeah, one comment, we can take one comment.
Has the evaluation has been made, how many of the departmental employees are asking for the old school?
Let's not make a distinction between departmental and non-departmental here. They are also individual. Everybody is driven by economic calculation. Nobody is doing charity here. That if I'm in the no tax. Why? If old is beneficial to me, I will stay in the old. If new is, it's the job of the policy maker to make new more attractive so that maximum people are in the new age. Yeah, and I think we have done our job, and you will see the results when ultimately those returns are filed. Yeah, perfect. So we have to move to there's one more.
Okay. I'm just getting a very real experience, but if you want to know why people have this trust, because this was the life case I actually did. When you had the old regime, then in the middle of the year, you mentioned this decade thing and to inspire GST expenses paid, all that was accepted in that. And there were people who had projected at the beginning of the year that the new regime is beneficial, and somebody I know had actually elected and that for all of that in middle of it. So if you want to know real life experiences of why people end up having these kind of trust deficits, but this is like now getting that same taxpayer to collect new regime this year will be a.
No, it is not trust deficit. It is because he found that this is more beneficial, so he shifted. Now, if he find this more beneficial, he will come here. It is simple calculation. It doesn't matter. Let employer do whatever TDS I explained that. You can select something else there and get your refund. Let employer deduct TDS. Who has that kind of generous heart that employer deducted more tax, but under the new scheme I have to pay less tax, so I will go with the old in the tax return. Nobody will do it. Yeah, we go to the 2 minutes is a lot. Please.
Opt out for everything. Why for them only one for partners who are having salary and they are not having any other business with us. Yeah, because those are the like this is relevant.
So this is a suggestion I will take that about the question that you asked about partner. Today I was, with the finance minister with MPs, I think that suggestion came from there also about that partner one, but we can't promise anything. We will note down your suggestions and we will examine it. You are dealing it with business income. Otherwise, it's salary only. So I think that's the point that, sure, we go to capital gain. Mukesh, I quickly want to take everyone to the restriction that is now being brought in.
No, I think everybody knows the capital gains restriction, the 10 crore threshold that has been laid out.
Yeah.
My only observation was that section 54 was inserted in Finance Act many years back. It was basically intended with the view that if somebody is selling a house and making gain and investing in another house, then you should not penalize that person. I think this will encourage generation of black money. The psychology of the taxpayer would be, if I am having a deal for a house which is in the range of 10 crores, I'll take cash. So prima facie, on the face of it, this seems like a regressive move. I'll give you my personal example. My grandfather retired from the railways, bought a plot of land in 1959. We still have that plot of land. I still have all the papers. He paid it in installment over 7 years, 20,000 rupees. That is valued today at 20 crores. My mother is still alive. If my mother decides to sell that house, she's going to be very scared about the capital gains. This is my story of my house. So I think that section 54, which came with a specific intent many years back, I think if I'm not mistaken, it was 82, was with an intent, one house, there should be no limit. Let people sell their old houses, old dwelling, make capital gains tax. So far as they're investing in another dwelling, they should continue. Yeah, the logic, the other point that I wanted to make was section 50 AC. Section 50 AC, which basically deems capital gains transaction on the circle rate, has itself seen its own set of disputes. I'll give you another example. I stay at Panchil Park. There is a circle rate for all the plots, but the market value is not identical. There are plots which are located close to ASR. The value is 1/2. There are plots that are located in the main road. There's a 20% discount. There are plots that are located in the inner side of the colony, 100% price. So the whole notion of 50 AC is, in my view, faulted. And if you read where section 50 AC and now taking away of this, you're encouraging black money in the real estate transaction. That's the only point I wanted to make. The rationale in the memorandum at least which I read 4 days back was that 2 days back was that it's been abused or misused by HNI. I'm presuming completely that over the last 2-3 years, we've had a lot of unicorn exits, lots of founders making lots of money, tons of money, and a lot of people encashing their ESOP in hundreds of crores. So a lot of that money has gone back into investing in residential house. I know of some founders who I met last week who said that they had capital gain of 7-8 crores and the entire money has been invested in a bungalow. I mean, yeah. So I'm not batting for the government, but I'm just possibly the logic. I just wanted to correct one thing. I said 50 AC, it's 50 CA.
Kamlesh, is that the logic? The logic is very clear. This capital gain concessional tax rate has given a kind of arbitrage in the market. You know, normally your income is taxable at applicable rate. Capital gain is taxable at concession rate, and in some cases, rather most cases, it is taxable at 10%. All those high net worth individuals that you can see their history. They convert all their applicable rate income into capital gain through in the way of the other, whether through insurance policy or through mutual fund or through market linked debentures or through equity. They all do these kind of schemes to convert their 30% or 42% income into 10%. And then they don't want to pay even 10%. There are cases, he said 7 crore, I said 700 crore. There are cases. And not one case, many cases. So is that the objective of the government? That middle class like us continue to pay 30% tax on their income, and high net worth individual either pay 10% or not even pay those 10%. There has to be how many people will buy. Work on ability to pay, which is called vertical equity. I middle class certain percentage of my income, which should pay more percentage of income. The reverse must happen. So that is not acceptable.
I think you're looking at a very myopic example, and you're looking at like somebody, a startup founder is cashing and making 700, 800 crores. But I think the point that Mukesh was making, I fully endorse what he said. This will lead to, black money transactions increasing. Secondly, the values of property have escalated for no contribution by me, right? Like he said, his grandfather acquired a plot of land worth 20,000, now worth 20 crores. Now, basically, you are looking at mitigating that gain. There may be yes instances where people today are able to utilize this advantage and invest in property. But we are not looking at the investment of 10 crores. We are also looking at later gain, which is because of market situation. So market prices of properties have moved. Or let us say I hold a share for many years, and the value of that share, suppose I held Hindustan Unilever for 20 years. Obviously, it will give me a gain. So that gain should be mitigated by investing in a property. That was an option given.
So now option is not available under. So I agree. So that is what the point is. That option was available under the law, which was proving the tax system to be regressive, and therefore that option has been withdrawn. And coming to the black money generation, I agree that stamp duty valuation should be fixed up more rationally, because that's a valid example that houses may be, facing park or facing road or maybe inside, and how can the stamp duty valuation be the same? So that is a part for the state government, and hopefully they will work on it to rationalize the stamp duty. But this provision will generate black money? Surely not. Black money is already being generated. That is because prices are, fair market value is always more than the stamp duty value. Tell me how many people pay that higher price. Let me know. I have a plot of land and my wife is insisting me that you sell this and buy a flat. I can't sell that plot of land because nobody is giving me fair market value in value. So that black money is already in the system because stamp duty valuation is not matching the fair market value.
No, I think what
law can come. My personal feeling is that this provision will further aggravate the situation we're talking about.
It will not, because I am still to sell it stamp duty value. Whether you have 10 crore cash or not, everybody is compelled to sell at stamp duty value only, because if I want to sell it more, nobody is willing to come forward and pay me more. If I sell it less, I will be taxed at full amount and he will be taxed under 56. We close it here with just one final comment. Is there any other avenue for that planning that is left open after this?
is there any good basis for taking up 10 crores? Could it be more?
No, sir. I will not say if there is any scientific basis. It could be 9, 8, 11, 12. I mean, it could be anything. Yes, sir. Okay.
The second part of our potential monitor about CCA. the arbitrariness, there is a dual arbitrariness. There is a premium picture that the stamp duty value to be taken to the correct value. And there is a very, very ad hoc way of fixing the stamp duty value. These are between because Council Park is bracketed in Delhi, there are bracketing. The Council Park is bracketed in the same category as government. The market values are very different. The government is actually Council Park and that don't happen at that. So there, as a lawmaker, I would have some sort of an recommendation which is really maybe there as a guiding principle that has to meet that development. And
The only other last point I wanted to make is that the black money in the real estate transaction has reduced considerably over a period of time. But there are outlier situations. You can attribute to demonetization, you can attribute to concessional rate of tax. My thinking is that this is going to be a psychological thing in the minds of the seller, and he will be encouraged to indulge in black marketing techniques. That's my only point. Contentious provision, definitely. There are provisions which are introduced and then rolled back as well. So this is something that the government might see how it goes for the next few years, and then take a call, because this has several other factors. Because if this leads to a lot lesser real estate transactions, more affordable housing prices. You look at a city like Pune, from where I come, and the more you go on the outskirts, today, the way the city has expanded, the real estate prices are such that a middle class person is not able to afford a 1 BHK or 2 BHK anywhere in the vicinity of the city also. So I think it could lead to some, I think there are a lot of other factors also, Mukesh bhai, and right now the government is not too worried about super expense, whether they pay a little more tax or not. So just I would, one thing, why, IFA conference is distinct, because you could tell us drafting issues also. So please, whatever provision is being discussed here, any drafting issues, please do tell us. Yeah. Maybe we take it up a little later, if you don't mind. I have exactly 70 minutes left and a lot of provisions to cover. So we quickly go to business trust. Mukesh bhai, this one seems important. There are 3 clauses, 3, 32 and 58, and the Finance Bill 23 proposes to insert 56 to 10. 56 to 12, yeah, to provide that the income chargeable to income tax under the head income from other sources that also include any sum received by a unit holder from a business trust, which is other than interest, dividend, lease rental, and also not chargeable to tax under 115 UA. So I wish we had someone like Shashwat to set the context for some of these complex provisions, but I can simplify it. There are 3 clauses that have changed the taxation regime of business trust to its unit holders, clause 3, 32 and 58. These are some very complex set of regulations for a first time reader, and I know that many people in the room may not be following the business trust regime, but Mr. Vashni, who drafted it, would have answers to all the questions that I'm going to raise. Now, what is a business trust? The concept of business trust was introduced because internationally, a lot of funding gets generated for real estate, which is called REITs, and a lot of funding gets generated for other forms of infrastructure, which is called InvITs, investment trust. Both these are clubbed as business trust in the Income Tax Act, and there is a special regime. One of the important features of the regime is that these entities are like trusts. They are not taxable entities. They are what we call it as transparent entities, and it's the unit holders who are taxed. So taxation is at the unit holder level. This scheme spreads across 3, if not 4 chapters of the Income Tax Act, definitional chapter, income exempt chapter, and then the special provisions that govern the taxability. There are 3 changes that have been carried out for business trust. The business trust is supposed to be having, the unit holders are supposed to be having income in 2 broad categories, dividends and interest. But as the business trust, which is InvITs and REITs, have started effectively functioning, other forms have emerged. It could be repayment of a debt. Now, this repayment of a debt has been a contentious issue with many REITs. So now the budget proposals in 2023 suggest that they carry out two changes. Number one, if there is a repayment of debt, it would be deemed as income from other sources. So section 56 also has been amended. That's the first change. The second change is that if there is a redemption for the unit holder, a unit holder contributes and there is a redemption, the redemption can happen in the lifetime of the business trust, or it can happen at the end of the lifetime of the business trust. Then that is also taxable as income from other sources. And there is a deduction given to the contribution you made, which is like a cost of acquisition. Now, this raises fundamentally few questions. Number one, when you say repayment of debt, isn't it prima facie a capital transaction? How can you deem it as income from other sources? This is one question that all the business trusts have raised. The second question is that when a unit holder contributes to a business trust, how is that contribution different than someone investing in a shares of the company or someone subscribing to a unit of mutual fund? Isn't that a capital asset? The third important aspect, which raises quite a few complex issues under the treaty, is that there are a lot of non-resident investors in these business trusts. So, what are the options available for non-residents? They can have foreign direct investment, they can be financial investors, they can be sovereign funds, all forms of debt. But this avenue is a very important avenue, and the reason I can talk about it is because when SEBI was formulating the business trust, I was involved at the conceptual stage as to how business trust REITs, InvITs are organized internationally, and it's a very good avenue for raising capital. Because one of the challenges that we had in India was the ability to raise capital for InvITs. Now, what with these two changes, there is complexity for all these non-resident unit holders, because these non-resident unit holders under the treaty, this income is capital gain. No doubt about it. So that creates a friction now with our domestic law, which deems this income to be income from other sources. So the challenge is for everyone: resident unit holders, non-resident unit holders. For resident unit holders, you're going now beyond the fundamental principles of taxation and actually taxing capital, deeming it as income from other sources. And for non-resident, you're creating characterization challenges. So I just thought I will make this as an opening point. Sorry, I took a little time, Arun, but I just wanted to explain the context. Okay, yeah. See, the main point about this business trust is I contribute my subscription. Those of you who have invested in business trust, I buy a unit of 100 rupees. I put that 100 rupees in that business trust, and then that business trust may invest in the equity or in the debt. Now, business trust has a taxation regime. So if you actually analyze taxation regime in India, you will find baskets. One is mutual fund, very tax efficient taxation regime. All interest, dividends, and short-term capital gain, long-term capital gain gets converted into long-term capital gain in the hand of non-resident at NAV value, and NAV value is calculated after full deduction. So, although for capital gain expenditure is not allowed, but that expenditure which is incurred by the mutual fund gets allowed indirectly. So, the most tax efficient system we have in India is mutual fund. Then you have AIF. AIF says pass through. So it says income gets passed through to the investor. Now the concept of AIF is that it is for 10 years, and income will get paid after 10 years, but it accrues every year. Therefore, AIF 1 and 2 I am talking about. It is only for high net worth individuals, because income gets taxed on accrued basis every year. So whatever is income, dividend income in the hand of AIF 1 and 2 gets taxed in my hand as same nature, interest or dividend on accrual basis, and then no deduction of expenditure, management fee that I am paying to him. So that is very inefficient in comparison to mutual fund. Then comes third way of taxation, business trust. Now that is very interesting.
because business trust found the AIF way of taxation very not so much efficient, tax efficient, and because there is a condition of SEBI in business trust that at least 90% of the income shall be distributed. So it was agreed that to promote business trust, we will only tax on distribution by the business trust. So if the remaining 10% does not get distributed by the business trust, it will not get taxed. Now that has given an opportunity for, first of all, the 10% you can set off expenses also. Business trust, so indirectly expenses get allowed in business trust sales. So that is one thing, fine, that's all right. I think that is intended. But the unintended part was because of the special regime of business trust that it gets taxed in the hand of on distribution and of the same nature as business trust that created a we are very smart in getting the opportunity and coming out with new schemes to evade taxes. And I am using this word consciously because I have discussed with business trust people and they agreed, yes, it is a wrong scheme. But that is how the law is. What Mukesh is saying, I actually talked to the promoters of business trust and they have agreed that this is a wrong practice, tax avoidance scheme, because the law allows it. So basically, I have given money to the business trust. Now that is my equity, kind of equity. And then business trust passes on this as a loan. And when that loan is returned, because the law says it is in the nature of the same nature, so it becomes repayment of tax. I have not given you tax, but my income statement says repayment of tax. Because it is repayment of tax, it's not taxable. So that was they realized this, that why, because the law says it is of the same nature as the head of business trust. So let us divide this thing instead of paying a different repayment of tax. Thousands of crore of tax was evaded in one case because of this. So it is not a small issue, and I can guarantee you, you talk to the actual those people who are associated with business trust taxation, they will say, yeah, this was required.
Any comment, question, yeah, quick comment question we can take here? Yeah.
Because I've been actually following these personally. So one challenge, because you're looking for IFA, your draft. Yes. So yes. So what will now happen is that because you've now characterized this as income from other sources, in those tax treaties with India, where income from other sources can only be taxed upon the country compared to non-resident. So this is taxable in India and the domestic law. The treaty will override it and it will be taxable only in that.
Yes, we discussed that, and it's a conscious call. I have a list of those countries also. There are about 45 countries where we don't have a taxing right under other income. So I'm aware of that, but we do have a taxing right under Mauritius. We have taxing right under some of the such nations, but we don't have under Netherlands. I am aware of all that. Yes.
Now,
No. I mean, the problem is the business trust will stop using this practice. That is more important. When there are a lot of anti-avoidance measures. That was in fact the first headline we put out when we went to the finance bill in 30 minutes. A lot of anti-avoidance measures. When you draft all the anti-avoidance measures, is there any sort of top of the hand calculation you do on what sort of tax it could bring to the exchequer? That is one thing. Anti-avoidance is very difficult. It is very difficult. It's more the principle. You rightly said. It's more the principle. It just like we keep our ears and eyes open. You must have seen last 2 years we have plugged many such anti-avoidance measures because we keep discussing with the people outside. And when we keep discussing with the people outside, people develop faith on us. And those people can come to us privately and tell us this is what is happening now. And then we actually get in touch with those people. It's not that we did not get in touch with the business trust people, that you are doing this. We have heard that you are doing this. Is it correct? So it's not that we are doing something in standard sign manner. I guess we then.
The point is probably not clear to me, at least I am not clear. If I, as an individual,
I paid 100 crore business trust, and they have paid some money, and they will invest in there are some thousands of rupees. Now, when they receive it, they will use it when I get it. But the government can still fund, which is what location usually.
Still hold the unit. You still hold the unit. That 100 rupees value you still hold. You got the money back of repayment of that. Your unit value has not reduced.
So the second point in your drafting, you have also said repayment at the time of redemption. So when you look at
Point we will examine it, but I told you about the first conceptual point.
I also wanted to point out, sir, you mentioned something AIS. When all these regulations were drafted, SEBI and the market regulators thoroughly analyzed how AIS work, how REITs work, how InvITs work. You will see a lot of high net worth individuals investing in AIS, right? But unlikely that in the REITs and InvITs, a high net worth individual will invest in it. AIS, Cat 1, Cat 2, Cat 3, this is category 1, 2, 3 by this SEBI, are specific AIS where the regulatory oversight of the regulator differs whether you're category 1, category 2, or category 3. In business terms, there is no such categorization. Normally, you will see that REITs and InvITs are gigantic, large projects. Let's say, for instance, there is an InvIT for setting up a metro in Bangalore or in Chennai or in Mumbai. These are several billions of dollars. SEBI formulated these regulations with an intent to attract huge dosages of capital. If at any stage you feel that there is lacuna in the law and REITs and InvITs are trying to misuse provisions which were otherwise meant for AIS, then there is a very easy way to fix it. SEBI does the KYC. No business REIT, whether it is REITs or InvITs, can come into existence without the SEBI approval. You can have an oversight like you have an oversight for sovereign funds. No sovereign funds can get an exemption without the Ministry of Department of Revenue blessing it. You have the same provision for REITs and InvITs, but by doing this, you are actually now holding a hand on the large investors who want to invest money in infrastructure. I'm telling you something that I've heard from the horse's mouth. So I felt that it is my, responsibility to table that this provision is challenged.
Nothing to do with the way trusts are restructured, REIT and InvIT business trusts are restructured. That has not been disturbed. It is one set of income. The way the law was drafted, people devise a scheme to pay me. If I am holding a share of a particular company, now whatever I receive from that company, which is not a redemption of this unit, that amount should be taxable in my hand.
Sir, I'm familiar by using the word repayment of debt, why it has been done, because that part was missing. I agree with you.
I'm talking about repayment of that part.
Correct. But yes, I think a word, now this will be deemed as income from other sources.
No, that repayment of that will be because you have to tax under some other head. No, so therefore it is tax under other sources.
By virtue of a REIT and InvIT bylaws, you can have only 90% income. Unlike a mutual fund that can retain a REIT and InvIT has to return all their money
Yes,
to the unit holder on a daily basis.
but it has nothing to do with this issue. That 90%, what I'm saying is that when I continue to hold that unit, the value of my unit has not gone down. I have received some money as a repayment of that. It is my income. Yeah, other source. Yeah, very, very interesting, but we still have a few more provisions to go.
repayment of debt, when you see my value has not gone down. If the corpus goes down, the enemy is bound to come.
It is That whatever is the corpus, that corpus has not gone down.
No, the energy of that unit will come down. When you pay out.
No. I think very complex structure, the way they have designed, it requires some kind of a very complex understanding. And we also have to spend a lot of time with those consultants who do business just to understand what are they doing. Chartered accountants and lawyers try on complexity. So thanks for the complexity, sir. And anti-avoidance measures are always a cat and mouse game between the department and the tax payer, tax professionals, tax consultants. So we'll go to the next one. Another anti-avoidance measure. I'll skip a couple of points from that. But another anti-avoidance measure is the tax 56 to 70. Now it's applicable to non-residents. And just when we thought that the controversy on angel tax is dying down, that those starters to have been recognized by IFA are out of the angel tax ambit. Here comes the widening of section 56 to 70 now to be applicable to non-residents on the face of it, looking like seeing the big one.
Yes, it is, but angel tax has been excluded. So startups that are approved by the government are excluded from this.
Just like
I thought that was the statement that the revenue secretary made.
Yeah, that's right. There was still some concern, which we have already noted, that there is a FEMA valuation and FEMA valuation puts the floor price. So there could be inconsistency between what FEMA is putting and what you are expecting. So that issue we will take care at the time of drafting of rules.
So at the same time, and if you ask me, if you are bringing capital into the country, and you have your own ways of checking whether the capital is coming from legitimate sources or not. You have section 68, you have other provisions in the act. Merely because this money is coming at a premium. Now, this question of valuation is often getting into litigation. And I am privy to several such large disputes where capital has come in at premium, you are seeking to justify the premium, they are searching outside as another calculation of the premium. Now the point is, if you think it is coming from surreptitious sources, you can certainly tax it as income under section 68. And why did 56 to 70 come in the first place? It came in the first place when you brought in corresponding amendment in section 68. Companies were issuing shares at premium. Courts were knocking down the addition under section 68, saying that if the premium is justified, if you can prove identity of the subscriber, creditworthiness of the transaction, genuineness of the transaction, there can be no addition under section 68. So therefore, by one brush, there was an amendment in section 68 saying that if the money is coming from a resident, you also need to prove the source of source. That did not apply to a non-resident. So 56 to 70 came in saying that if money is being brought at a premium, which is not justified having regard to the fair market value, that premium will be taxed in the hands of the company itself. And there was an exclusion for non-resident. So if you are looking at attracting capital into India, I think this is going to be an end. And your startups today have huge valuations. The valuations may not be justified on the basis of the intrinsic worth of the company, but valuation is a matter of perception. My valuation, the valuation that I see of a company may be very different from what Arun sees. And people may not be. So I think this is a very subjective determination.
No. But just to see, whatever points you have made, they are valid points. Absolutely no issue about that. And there is FEMA regulation whenever there is an investment by non-resident into these startups. It must meet a floor price because RBI is aware that they should not, our company should not be sold cheap. So this has come to our knowledge now, and we will make sure that we align ourselves. Yeah. No. See, if we allow FEMA price, to be done at FEMA price, whatever you are saying that you will still be higher than FEMA price. Okay, so let us see. I want to make comment.
For company, investment category currently doesn't include private equity. They are also regulated
Yeah, so that can also be done because for that we already have a power in the act. We don't have to do amendment to the finance bill. There is already a power in 56 to 7B that we can notify that investor whose investment will not be scrutinized under 56 to 7B. So that is also a good suggestion and that can be considered. Yes. Mukesh bhai, and this is for you and community board. The demand was that 56 to 70 to go. Now, instead of it going, it's exactly the opposite.
Let me just highlight a couple of non-intended consequences. In a related party situation and in an unrelated party situation. You have Rule 11 UA to support 56. Rule 11 UA gives you both the options. Discounted cash flow basis of valuation and fair market value basis of that. In a new venture, assuming that it is not covered in the startup or in a related party situation, if it's a multinational, why should it matter at what value the shares are, new shares are issued? It could be at a super premium. And why should now you have a provision in the law that you're forced to follow the valuation method? It will not necessarily be the case. So I think that 57 to 7B has a lot of unintended consequences in a related party situation where a multinational should be given complete freedom. They will not follow Rule 11 UA. Rule 11 UA prescribes de minimis value. It doesn't put out a cap. Now you're putting out a cap. Second, if it is an entrepreneurial venture, we've seen in the last several years, besides the, there's a bloodbath we've seen in the market in the last couple of years in tech space. Look at Baiju valuation. When Baiju kept on having investment after investment, the largest investor, I have no doubt in my mind that there would be no merchant banker who would support that valuation, even under 11 UK. But they invested because the investors saw potential. Now with this provision, we have a serious issue to deal with on those investments. So you're again now looking at a provision, well intended, stop black money, stop, round tripping, people who have put money abroad to bring it back into India, well intended, no doubt. But look at the unintended consequences as well, because now you're telling this investor who is willing to cut out a check for a large venture, hold on, now you have to follow my valuation. That's the only point of caution I want to make.
From another angle, all that you are then now encouraging is increase the number of shares that you issue, reduce the value. But if you have, like you're saying, if it's not a related party, you may have a situation where it leads to dilution of control for other shareholders. So therefore, to limit the number of shares and issue it at a premium is basically to maintain the shareholding equity or the shareholding.
I think it doesn't work that way. That you use the number of you increase the number of shares. No, it doesn't happen that way. It doesn't happen that way.
So the very basis of the Vodafone and Shell challenge in Bombay High Court was this.
No. I was actually going to come to that as a Shell decision. No. I think in 11 UA, what you value is an enterprise, and then you decide how many number of shares are issued, and then share price is arrived at. The issue which you have raised is a valid issue that valuation can somebody may be willing to invest in more than the even DCF valuation. So that's a reasonable issue, and we will slowly look at it. But I don't think it is as simple as that you increase the number of shares and no. So,
under US federal law and company law, they have a doctrine of redundant action, under which it means that, and again, I dealt with this personally. So if you are share and you own a fully owned subsidiary, if you were actually in the US, you don't even, and you want to inject more capital in that company, you don't even have to issue more shares. They call it the doctrine of redundant
action, because according to them, if you only own a company, any corporate, and if you are injecting more capital in that company, you are just incurring another secretarial transaction by fee. So this is called doctrine of redundant. This is actually embodied in US federal tax law code and company tax law. Huh? Yeah, so you can examine this issue and at least you can build it that in the case of a wholly owned subsidiary, like that then in that case this doesn't get triggered because there is a lot of OECD.
So that you are talking about, I am investing in my wholly owned subsidiary. But issue is different. Issue about Mukesh is saying is different. Angel investors are coming, they want to invest. But Mukesh, since you mentioned, right, when Tiger Global and all the top banks, everyone came into these companies, they are no longer angel, right? It's really not. I mean, so these are not approved angel investors. They don't want any benefit, but these are startups. No, nor are they coming in at the angel stage. Correct. They are actually coming in at the growth stage.
What by this would be available?
Sure. So I think can't recognize private equity firms be exempted from this. Any investment, that's what I think Amay says. Can be, yeah, perfect. So this is, yeah.
The department has known this sector in the past 10 years, a group more than can this be the one that should never be changed?
Sure.
Can we move to the next one? All in all, 56 to 70, which many wanted to go, the ambit has been expanded. It will continue to be a hotbed of litigation. Yeah, Aditi concurs. Yeah. Next one, we go to MSMEs. Section 43B. On the face of it, seems very simple one. Mukesh, but yeah. You won't take it up? Which change is it? 43B. The MSME ones, they're saying that you have to, yeah, on payment basis.
I think it's a rationalization measure more sympathetic that you see payouts to MSMEs on par with the statutory basis. I'm sure there's an underlying intent.
Simple question, assuming that you have to make a payment to MSME within 45 days, you make that payment after 90 days, but within the same financial year, you'll get a deduction, right? You will get a deduction. It is not like ESI and all those PF, deduction that you are not allowed in the year of payment. Here it is clear, it is allowed in the year of payment. So basically what it says is that if you don't pay within the time allowed under MSME Act, you will get deduction in the year of payment and not in the year of accrual. You still get it, yeah, of course, exactly. So it doesn't incentivize time payment to him. No, okay. So basically you are saying that you can only delay it 31st March. That's all. Exactly. Yeah, you can delay. Yeah, you can delay it 31st. And I must tell you as a MSME and many MSMEs do it, that when you raise invoice on big clients and they don't pay within the time limit specified in the MSME Act, since they have to also disclose it in the account, they ask you to revise the invoice. That's what happens. And being an MSME, you are not.
My only suggestion is MSME should cover small CA and law firms also.
Yeah, the only thing is you have to be registered under the act, right? So when you do a lot of vendor registrations, you have to be registered under this act. But anyone here who's also since we dealt with DPIIT, has anyone actually for their clients applied for the DPIIT registration for startups? Yeah, so have I. Yeah. It takes 3-4 hours. You need to be very patient. Yeah, but very efficient process. Must be. Mukesh at the beginning of the webinar did mention about MSME and the tax buoyancy. So the economic survey, the economic survey says that the tax buoyancy of MSMEs is higher than the pre-pandemic levels.
So if you look at the economic survey report of this year and last year, the chief economic advisor has put down some very interesting analysis that post-pandemic and post-demonetization impact, how the formalization of economy has occurred, including
number of new taxpayers that have got added. Actually, I was reading both the analysis, it makes a very interesting thing. Yeah.
The point that you made, that payment to MSME before 31st March will be allowed. If it is beyond the due date, I think this proviso carves out an exception.
That is for due date of filing return.
So what that proviso exception is, that for other payments, we say that if you pay by due date, it is taken as if you have done it in the financial year for which the return is filed. So that it is taken out from that proviso.
No, but at the same time, then when this time limit is there, which may fall in the same year, if it is paid beyond the time limit specified in section 16, I think we need to clarify this.
No,
Because,
what?
no, the time limit is 45 days.
Yeah.
So, and you have made the payment in 90 days within the same year. Now, in that situation, how do you claim it? No, we are on 43B now. MS ये clause H जो आप बात कर रहे हैं, इसमें तो ये हो गया policy
That everything which are otherwise allowable in respect of, person can be allowed. No. Let's be, no, it's okay, yeah. So that is the top line of 43B, notwithstanding a deduction otherwise allowable under this act in respect of payment to MSME shall be allowed only in the year in which sum is actually paid. That is what it says.
if it is due in the same year and the point.
Doesn't matter. I mean, we have clarified even in our explanatory memorandum, if you read explanatory memorandum, it's very clear. Yeah, we can go to section,
And mismatch that will happen on PDS, that's another thing.
yeah,
So, people will be accruing the liability in their book for payment to MSME, deducting tax at source. And then they will actually be making a payment, MSME will be claiming credit in the year in which, assuming they follow the cash system.
no, that problem is irrespective of this amendment. But that problem is taken care of. In fact, we have amendments. We already had an amendment where you got the TDS, but you will disclose it in future years income. That was already taken care of. So you carry forward the TDS in your return of income. So you use that in the year in which you show your income. That provision was already there, but the reverse was not there. For example, RBI bond. You know, I have purchased RBI bond, which is going to mature after 8 years. I am showing income on accrual basis every year. On the 8th year, RBI will give me all cumulative interest and will deduct 10% TDS. I have already disclosed that some 8 years time. How do I rectify that return? We are using that facility now. So that problem is already taken care of, where you have to carry forward your TDS, and now where you have to carry back your TDS. Both possibilities they are there in the act now. No, 4 years from 4 years from the period when the TDS is deducted. So you can carry forward 8 years back, doesn't matter. Otherwise allowable. That's a catch. Yes, so that's a 43 litigation that's pending. Yeah, what is seeming an innocuous section, Mukesh bhai, also can be quite tricky to read, like this one. Section 28 and 194 are important changes to the definition of perquisite under 28 to include cash, as also under 194 are completely straight to you. This is just that, people had certain apprehension, not apprehension on clarity issue, when, 28(4) is there, while the Supreme Court said that, because of the use of the word, whether convertible into money or not, it means this provision applies to payment in kind. It does not mean that if the payment is in monetary value, it is not taxable. It may be taxable under some other head of 28. So when we brought 194R, we also took that view that benefit of purchase could be in any manner, whether monetary value or in kind. So now this has been clarified. There was some doubt because 194R is a matching section of 28.4. We said it is not a matching section. But then people say that because it uses the same terminology, it is a matching section. So there was some confusion. That confusion has now removed. So we have clarified in both sections that this could also be in cash. Again, I think there's quite a bit of confusion on the impact that this will have, including any possibility of overriding Supreme Court.
I think while the intent may be correct to clarify this in the context of 194 hours, but the unintended consequence of this would be that, as Arun said, it may seek to override the ratio of the Supreme Court judgment in Mahindra. It says that Mahindra, that if there is a write back of the principal amount of loan, now in that situation, the Supreme Court says it does not become income under 28. If we have provided this clarification that the benefit can be in cash, partly in cash, or in kind, then in that situation, this write back will also become income. So if it become income, the question will be, look at all the cases before ITC.
Before ITC or after ITC?
No, which are pending before ITC.
I reply to that.
So therefore, I think if this is consciously done in order to bring the right back to tax, what you are also seeking to do is tax a principal amount transaction. It's a principal account transaction of taking a loan. So normally it should not be income, even if there is a waiver of the loan. And the waiver is not going to happen for ulterior reasons. There are reasons why the waiver will happen. If, for instance, the bank does a restructuring package and waive part of the loan and part of the interest, while the interest may be taxable if you already availed the trust. The write back of the loan is otherwise a capital account transaction. So this is getting into the realm of bringing what is otherwise a capital receipt into the ambit and domain of taxation and as an income.
Many capital receipts are taxable under the Act. So this is, first of all, this is not the first time. Secondly, we are talking about case before ITC. Why have I gone in ITC is because I have huge losses and I cannot run my business. Somebody else is willing to take it over. Now, if there is a waiver of loan, it will only wipe out losses. It is not going to result into income. Because why should my loan be favored more than what I have actually incurred loss? Very logical question. If I have incurred loss of only 100 crore, why should my loan of 200 crore be paid in ITC? Simple. That is point number one. So you will not end up in a taxable situation. Number two, even if you end up in a taxable situation, income tax department is way down in the waterfall in ITC. So in any case, we are not going to get that. Tax is also going to be written off. So that situation will not arise. It's a normal thing. When you are getting restructured, you have losses. Somebody else is going to take over your losses. Then let that loan which is waived off should also reduce that loss. Okay, so it is a backdoor attempt to get taxes and ITC.
There are
the unintended consequences. In an IBC situation, there are many stakeholders. There is an unsecured creditor, there is a promoter, and there is a bidder. When a bidder goes for bidding for an IBC company, the bidder has in his mind how he is going to negotiate with the bankers who are going to take a share of. So there is a price that needs to be determined. So in one IBC, you may have a banker as a secure creditor taking 80% share of. In one, they may have 20% share of.
If 28(4) is applied and there is a tax implication on the shave off, it will change the entire economics of any DCP. It's bound to. So I think this is a serious unintended consequence. I think all IBC cases in my maybe it's intended. All IBC cases in my view should be outside of the purview of this section.
But unintended, so far as I think is concerned. You will have more companies going the bankruptcy route rather than being taken over on IBC. If this is to become, a practical reality.
Right.
They are going to make yes.
Because, sorry, liquidation.
Liquidation.
But I thought Mukesh was the GST Council and the further notification that came after that saying that that IBC dues will be waived off and so on and so forth as a part of. So you're saying the NCLT once the NCLT passes the order, the adjudicating authority passes the order affirming the creator of the COC decision. You're saying that will not be final. There will still be a tax consequence under this. So I'm saying that when it goes to the NCLT, the economics of the entire IBC will have to change because now this bidder will have to factor in the 28(4) implication because the shave off is going to attract that. On a more lighter way, one of my smart associates today came to me and said, "Sir, next month onwards, when I'm traveling, please book the hotel in the firm's name. Because otherwise 28(4) get with 194(r) is getting affected." And I said, ask her how. She says, read 194(r). If I'm not an employee in the firm, all the law firms have only retainers, and they normally travel, they pay the hotel to the credit card and they charge it. So she said the moment this amount is reimbursed by you, you are attracted by 190(r) because of the new section 28(4), and I have to pay taxes on that. And in a lighter way, but when I read it, I felt there's a lot of merit in that argument. Any comment that issue is clarified in the circular that we issued because which is very logical. If I am a consultant to a company A, now I render service to company A. Whatever company A gives me should be my professional income. Whether he is giving me like a service fee or he is giving me as reimbursement of expenses. Now, reimbursement of expenses was not becoming part of the turnover because a wrong practice. Reimbursement should become part of my receipt, and then I must get it reduced as expenses. This is how it should work, and this is how 50% should get calculated, which is under 44 ADA. So if you remove that reimbursement on the top side, on the right side and also left side, the tax department gets it, the government gets it. The right thing is, but yes, if the hotel where I am staying is booked by my client, then it is his expense. It is not my receipt. But if I am paying for it and company is reimbursing me, then it is my receipt. And the money that I pay to the hotel is expense. So both my sales should go up and expense should go up, which will have an impact on 50% presumptive income. Yeah, the point which we are not going to cover, but since we are speaking of 194(r) is that now it attracts penalty and prosecution rigors as well. So be careful. All of us have to be careful. Is there a threshold, Mukesh bhai, under which the defaults will not attract penalty or prosecution like GST? अभी 2 करोड़ का अरेस्ट का थ्रेशोल्ड आ गया है. Is there any threshold in for 194(r)? Mukesh, Kamlesh ji, any threshold? Okay, we have removed one provision. Provision. Next, today I am doing a Greg Chappell used to do, changing the batting order. So I am changing the order of the points. The next one is Vijay, transfer pricing. Yeah. One of these questions I can't answer. That will be doing the domain. Yeah, please take everyone through the transfer pricing. Transfer pricing, not very much. I think one is the procedural part of having to file the documentation within 10 days. Extendable by another 30 days, so 10 plus 30. What will be 30 plus 30? So
timelines available for filing documentation goes down, so now proceed with, so there's nothing much to say about it. So documentation needs to be there in time so that I can file. The law anyway provides that documentation to be there when the certification is good, so I think that's one part of it. The other part of the controversy is with regard to the concessional tax for cooperative society. So again, there will be some related party transactions which will call for arm's length price determination. Again, practically looking at cooperative societies, I don't see this as much of a concern unless they become smarter in how they structure it. Right now, they almost distribute whatever they earn because most of these cooperative societies are run by farmers and others. So there is not much of profit there for the concessional tax rate, but if someone starts planning and leaving more profit behind, because ultimately the profit belongs to the same farmers. So then maybe there will be underpayment questions and therefore transfer pricing could begin. So there will be a compliance required for that. So these are two areas of transfer pricing. And
Were you expecting any more, Vijay? Are you expecting more to see amendment?
yeah, a few more, which remain as wish list. One is, clearly taking out people from compliances where there's no relevance of it. For instance, presumptive taxation companies, then there are companies like insurance, life insurance part of it, where tax is not determined by a profit and loss statement. So again, like by transaction don't have a bearing. We've had a Delhi tribunal saying penalty should be imposed non-documentation for a company of that kind, which where your related party transaction has no bearing on your tax cycle. So I think you should take them out of compliance unless they comply.
And Vijay, is safe harbor attractive now, or is it still not attractive enough?
So that's not a budget issue.
Not, but I
It is not. I think there is a lot of activity going on that front. The tax policy research with the CTR, they're working on it, and I've spoken to some people in the IFA also who want to kind of contribute to it. So everyone is looking at making safe harbor work better.
Vijay, can you spend a minute on a new generation of PP litigation? You have over 9,000 transfer pricing cases today in this country, but apart from comparables and other cases which come like a routine now, any new generation of PP controversies that you are seeing over the last 6 months?
No, I don't think generation, but we've seen some resolution, Chennai High Court coming up and saying foreign interested parties work. So for where it's not rocket science. APAs have done it, there is some APAs for that, but these things have happened, but the judiciary saying it at a high court level, maybe, that the locations and cases for that in the tribunal. So these are things which have been there, but high court probably is the new thing. So as a concept, if it gets further enshrined, I think India headquartered companies doing business overseas will be able to apply that more effectively overseas interested party as a concept. So that's some evolution in the, otherwise, most of the litigation seems to be the same process, comparable. There are some complex ones which are related to overall method to be used, whether it be profit split or PNL. Those are there, which are good and interesting, but far between. But I'll also tell you that when the initial question was on the non-adversarial part, for 2 years in between, we didn't have any PP assessment. So maybe less than 100 cases of PP assessment. It's a really big drop in PP litigation. Just look at the quantum. So the numbers would go down significantly. What would typically have hit the tribunal would not be a significant drop in.
That affects Mukesh Bhai big time because he's authored a book called Tax Dispute Resolution. So, yeah, I'll come. Mukesh Bhai, on transfer pricing, you want to add a bit?
No, nothing, just one suggestion that has come from one of our IFA colleagues in Mumbai.
Yeah.
On your earlier question, prosecution. It's 25 lakhs for delay up to 60 days. That's the threshold. The suggestion is can it be brought on par with GST, which has a limit of 2 crores. That's the suggestion.
Wonderful. Amit, very brief, very brief.
Yeah, we are taking it up.
Yeah. The next one is we go to changes with regard to the appellate procedure, and you have 100 joint commissioner who are going to be deputed like a Mission 100 would be looking at reducing the pendency. Does anyone know how much pendency is there at the CIT appeal stage? Admitted pendency? That was stated by senior advocate Arvind Datta during the case before the Supreme Court as an amicus, saying that 5 lakh is the pendency. I really wonder how this is built up. And you have IPAT now, which is disposing of cases within 15 days of the appeals being filed. But Mukesh, you think this will hopefully reduce that pendency by half? It deals only with small appeals.
I think it's a good measure. I mean, I always felt that section 253 should have deleted the word endeavor. Because if the DRP can decide the appeal in 9 months' time, objections rather, why can't the CITA decide in 2 years' time? So I think there's a bit of inefficiency in that part of the administration of the department. 5,50,000 outstanding cases. CIT appeals used to just hide under the word endeavor because endeavor doesn't mandate it. Now let's see if this works. But I think, I mean, I don't know whether it's to overcome the inefficiencies of the CIT as an authority or actually genuinely getting some of the junior officers of the IRS who are at the additional or joint commissioner level get more empowered to deal with it. But I always feel that there is an inherent conflict from how an assessing officer can decide a commissioner appeals matter. In a faceless era, what if that joint commissioner has actually looked at that assessment? So what happens when a joint commissioner acts as a assessing officer as well as a CITA? So I think there are some questions that are more there from a conflict of interest standpoint.
How much do you think this transfer of all bunch of office to the business of real center responsible for the village, the reporters are very low. And so just pending should that also be responsible?
No, see, I will not like to answer question why there were less disposal in past years. So because it's always like to identify the problem and the solution. The problem has been identified that there is a backlog of cases and it has to be disposed of quickly. So I would like to concentrate my reply only on that part. And the question, very valid point raised by Mukeshji. So once I clarify how it is going to work, probably those doubts will disappear. So it is like this that joint commissioner will be redeployed. So it is not that somebody who is doing assessment is going to do a piece. No, that is not the situation. If some of you are from maybe some of the young, attendees here may not be knowing it, but those who are a bit experienced will know there used to be a TC appeal earlier, deputy commissioner appeal, and that deputy commissioner nomenclature was different. That is equivalent to today's joint commissioner, that deputy commissioner earlier. So this institution was already in existence, but it was brought to an end. So it is not that it is something new. Now they will be deployed, 100 of them would be deployed, and only those cases which are passed by an officer junior to them. So it is not that if an assessment is passed with the approval of the commissioner, that will go to joint commissioner appeal. That will not be the case. Smaller cases will be given so that when the cases are pending, each case is important. If you see from taxpayer perspective, while the department may say that we are more interested in disposing high demand cases first, but from taxpayer perspective, each case is important. Even if there is an addition of 50,000 in my case, I would like decision to be fast, right? So each case should be given priority. So while smaller cases are attended by joint commissioner appeal or decided by joint commissioner appeal, you will have larger cases being decided by commissioner appeal. But that apprehension which is there in the mind, which was expressed by engagement, that won't be there. It will be a separate, just like commissioner appeal is also an IRS officer. He put the CIT act in one case, but he CIT appeal another. It's just like that. Yeah, it will be. Yes, that's right. I think the one word missing clearly when it comes to CIT appeal is accountability.
5.5 lakh cases pendency, really, it doesn't, reflect well on that.
I think it's basically also to do with the fact that, while we were migrating to the national baseless appeal centers, there was litigation, raised on whether you can dispose of an appeal without giving an opportunity of hearing. And that matter traveled all the way up to the Supreme Court. And in the Supreme Court, the government on affidavit stated they will be making the necessary changes so that a personal hearing becomes necessary. So I think that process has taken time, and I don't think you can hold it against any one individual. Basically, the system needs to be geared to, dispose of all these pendencies.
In India, for any issue, we always have a system, but that's fine. Ajayji, the point that Amay mentioned seems to be quite important. Maybe you want to go first and then, yeah. Yeah, so that if you read explanatory memorandum, it is there that, DRP order, if assembly has filed an appeal against a DRP order, the department can file cross appeal. So that point is mentioned there, So basically, there is a concern that are you increasing litigation? Probably, it once again, how you look at the, that famous saying. If it is already in litigation and you ask the judge when you are deciding these two questions, you decide my two questions also, whether it is increasing litigation. So that is just the point.
I think I see as a positive step. You see, today, if you go before the DRP and the matter is pending at the instance of the revenue at some forum, even at the High Court, Supreme Court, the DRP holds its hands in order to give you relief. They would say that although the tribunal has decided to issue in favor of the assessee, the department's appeal is pending in the High Court, and therefore we decide the issue against the assessee. Now, what does it do? It requires the assessee to move the tribunal. It requires the assessee to move the tribunal for stay of one, and then that entire process has to be continued. So therefore, it is the assessee who's put to onus to say why this demand is not collectible, and despite the fact that this is a covered issue, the assessee may have to pay up 20% of the disputed demand while the appeal is pending before the tribunal. Now, I would think, and I would be optimistic to think, that if the government has the right of appeal, the DRP should consensuously decide an issue which is already covered by High Court decisions, Supreme Court judgments, tribunal judgments in a particular manner. And the revenue can then have its remedy in law. They can file an appeal. One point, Kamleji, when you mentioned that if the assessee has filed an appeal, they can file a cross appeal. Are you saying that if the DRP is given the entire relief, there can be no first appeal by the department?
So department cannot file appeal on its own.
It will only be in a pending appeal that they will raise it.
So DRP was litigation reducing measure. There's a commission of two commissioners sitting together, may decide in favor of the assessee for against the department, and it's okay. That is why stage one, no appeal was prescribed. The department cannot go there. It was introduced again. Then it was taken away. Now a cross-certification comes in. So it hasn't really functioned or achieved the initial objective.
Yeah, I think sir has preempted my question. Perfect. Vijay, you can take that.
No, so I agree. So it's either or. Either you make it fully applicable, as Ajay said, it would be better that let DRP give all the relief and let ITT figure it out. Or you make it a much more better mechanism, not the way it's drafted right now. You give it enough powers to settle, and whichever way, I think we've done enough APAs to have an experience of how to settle cases. Given that APA, it is just like a dispute resolution process domestically. So why not have a domestic dispute resolution without having to, worry about statutory commissioners, be fair, unfair? Give them the authority to settle and let them be in a full process that get done like the unilateral APA. So either you make it to that extent or you make it to be available. This cross objection doesn't help, because then you will again find out which is that one issue that should leave open, so that the city goes in appeal, so that department goes in appeal. Then it's a lot of advantage. It's better to just make it to the
Vijay, having the DRP and it helps that
you don't have,
So no one wants a scrapping of DRP, right? DRP has to continue.
Possibly stronger DRP,
Yeah.
the proper settlement.
And when you say stronger,
So, so we understand that there will be legal questions, which you want to keep it alive because matters are pending in High Court. And you don't want to opine on that and close it.
Like canon in Supreme Court.
So you keep that open and you say, so there will be two channels in the DRP. One channel you say, I will take it through a litigation. Whether assessing the appeal or department appeal doesn't matter. The other piece which should be settled is the controversy question, comparable 50%, 80%, you settle it and close. We have the tax rule. So you should find a way to. I think it's non-criminal.
I think I want to take on your word for a moment and a question to Mr. Vatne. That is dispute resolution committee. There was a provision made that you think this should be operationalized that must be made that it can settle. At the power to settle this dispute resolution committee in order to settle disputes across the table.
Yeah, hopefully.
Cryptic answer.
Okay, sir. I think that DRP as an institution gets often the maximum bashing. If I look at the trend of orders in the last few years, it hasn't been bad. So many appeals, I mean, I don't appear before the DRP, but when I go to the tribunal, I see many DRPs have given release. So the functioning is far better in the latter half of the history of DRP than what it was when it started off. I entirely agree with Ajay and Vijay that if you want to make the order appealable, make it appealable. The cross objection is a challenge. Let me just explain to you why it is a challenge. Let's assume that an SSC has got a release from the DRP, and on some issues it has not got a release. So the SSC files to the tribunal, which opens up the gate. The problem will be here is not that the SSC's appeal, but the department cross appeal. And the grounds of appeal are not fungible. The grounds of appeal get mixed up. So now you're telling the tribunal to rehear the matter and actually making the DRP functioning redundant. So wherever the DRP granted a relief, tribunal will hear it because the department has filed a cross objection. Wherever the DRP has not given the relief, SSC is filing an appeal. So you are actually abdicating the responsibility of the DRP to the tribunal. So I think you might as well keep it clean that the department will have a very intelligent basis to determine whether an appeal should be filed or should not be filed. Because you have a collegium of 3 commissioners giving the relief to the taxpayer. And hence you need even a more superior authority to assess whether the appeal should be filed or not filed. If you are able to do that, then give the right to all the departmental officers to file an appeal. But if the jurisdictional commissioner is going to take a call on whether he should listen whether to file an appeal or not, that's wrong. Because you already have 3 commissioners who are sitting on the collegium to decide the matter. So I think this requires a little bit of thinking and strategy.
Beautifully summarized, okay, very unconnected, but soft brand is a matter where Karnataka High Court tried to, try to clear a lot of cases at one stroke. That judgment is now reserved by a bench headed. Huh? Yes, this is Kodari is here. Yeah, so absolutely. So soft brand is before Supreme Court judgment is reserved, and it might it's a colossal waste of judicial time, and that too of the final court of law. It's decided very easily. Whatever. I mean, I'm not going to say anything because Justice Kodari is present over here. That would be mean like I'm trying to glorify him. But I think it was waste of time of the law officer, the court to hear soft brand. 265 of them in one stroke. And nobody knows where it is going to go, even who's going to author the decision. Yeah, that's as frank as I can get to. Yeah. Last year, 48 judgments were passed on direct tax, and 24 have gone in favor of revenue. That's the best strike rate that the revenue has had since Taxupra started reporting tax cases per year. That wasn't supposed to be sarcasm. Yeah, last couple of provisions we are almost done because we have now exactly 5 minutes left. One is the TDS provision for 94. Maybe before that we can look at capital gains and market link dividends. Okay.
there was an arbitrage, which is now they're seeking to close the arbitrage. The argument is it's a rationalization measure. There was a loophole. People were classifying income from hybrid securities as again they want to take a long-term capital gain. But I think Mr. Vashni only could clarify that what was the thinking behind it. Company capital gains on market linked debentures. So it was that in market linked debenture, once again that instrument was created and only high net worth individual could invest. Somebody who can invest more than a crore rupees and all. And they made an instrument in a manner which was linked to the market, so that if a market goes up by this much, you will get this much fixed risk-free interest. If market is between this and this, then you will get this much interest. So basically, what you were actually getting interest income, so they converted income into a long-term capital gain because the moment you drop 12 months, it becomes a long-term capital asset. So it was a creative, very clever creation of converting your interest income into long-term capital gain. Since Kamlesh said creative, this is the case before Tax Sutra was launched. That was dividend stripping and Walford. Supreme Court did uphold Walford, and I thought anyone who had read previously Sapadia's judgment in Walford would not have thought that Vodafone was going to be open and shut in favor of revenue. So, yeah. Since Kamlesh mentioned creative, that's why I went that route. How many here have read the Walford judgment? Put your hands up. Yeah. Last point, TCS and overseas remittance. Are there any comments that it evoked a strong reaction?
I think basically it's a cash flow and a timing issue. So 20% TCS on foreign remittance seems high. Of course, you will get credit for it against your taxes. But I would think that that will put the individual out of pocket if you have to pay 20% on the remittance that you seek to make. I think already we have a 7.5% TCS. I think above 7 lakh, yeah. So in any case, you are able to track the person who is making the remittance. 20%, I think, is on a very high side. It's exorbitant.
So I agree. I think 20% is more than penal. I think it's criminal.
You can go on. You can take a liberty because it's not level.
I think it should have been more reasonable because the whole idea is to see if there is a income escaping tax or not. Even if you do it like you do on cash withdrawals, you establish a trade. So if you want to establish a trade, it has to be a very superficial token amount, because the moment you do a token amount, you establish a trade. And the department's artificial intelligence can always follow that assessment. So 20% is
Fundamental question, okay, but is that there's been the offshore wealth transfer has been used in the last few years, and there have been thousands and lakhs of Indians who renounced Indian citizenship, possibly have moved their wealth overseas as well, along with the citizenship. Does it have anything to do with that at all?
for Mr. Vashni to answer,
Or are these two completely unconnected?
I think if this is creditable, then I don't think it has anything to do with that. It's only a cash flow and a timing issue. So you have groups, tour operators take Indian groups abroad, and Indian today. So travel also is 20%. So Indian, Jain, Guju are the biggest travelers. So this is going to impact substantial way in terms of cash flow. As Mukesh said, and I also fully agree with it. If you want to have a trail of people traveling, people remitting money overseas, you can do a 5% DCS rather than a 20% DCS. And again, sir, it will result in, I think one should not be saying, but this may result in people moving money to Havala or buying foreign exchange to Havala.
See, religious tourism is something which can always be considered. This section gives powers to exempt certain transactions. So
I mean, it depends, I mean, I can't commit, but this is something which would always be examined by the government. And so far as other travels are concerned, then the Prime Minister said from the Red Fort on 15th August, देखो अपना देश, थोड़ा अपना देश भी देख लो भाई.
Investment as well, right? Arun, I agree with your observation. This has something to do with the overall quantum of remittance. It may not have a gain to the government, but it does dissuade cash flow because of cash flow.
The reason why we and I have on some other panels.
For the last 4-5 years, I've been discussing this issue of the government want something, why Indians are leaving, why Indians are announcing citizenship in droves.
And possibly now shifting wealth as well. So I'm not sure this is connected, but this seems to be. We are. Yeah. We incorporated in the language saying that directly for the university part. What we said, wherever we in the paper that we are university 45. Now let's emphasize where the assessment is over. The order is from after the let's say the IT I could be got an update order in update. So even thereafter, the assessment officer drafts a release period and says now the refund which you would have got even after an update order is in your favor. I will withhold it because under the new amendment it is likely to adverse the impact. Now the question is, if I got an update order in my favor, it has to be over. How is it likely to adverse the impact? And that's one. The double whammy here is that the simultaneous amendment under one is that now he's entitled to that to the interest on additional interest. So normal interest will be here. Yes, I'm going to post appeal to city because here is the case where under appeal to city 24.1 interest. Post that he now takes amended provision. First, we can withhold it in a case where likely to impact already in my favor. I have something in my favor. How is it likely to impact? Secondly, also do not be interest.
The first one is administrative.
Point taken. We have to. I'm under very strict instructions today to wind up by 5:45. And yeah, my friend has already got up. We have 45 seconds to close, so I'll take closing comments. 10 seconds each. Mukesh, my closing comments. We'll take this question off.
Yes.
I think it's an excellent budget overall, direct and indirect tax proposals. I don't know whether, given the compulsions of anyone holding a public office and responsible for 1.4 billion people, anyone could have done a better job. There are always two sides to an argument. Whereas our job is to protect taxpayers, Mr. Vasani's job is to make sure taxpayers continue to be widened, and difference of views are going to be there. So I think I'd like to congratulate him and all his colleagues for delivering an excellent budget.
Yeah, and I think today's discussion opened up more opportunities in terms of things that we can look at, like 56-70 will be looked at in the context of the RBI. So those things which are again unnecessary procedural stuff which can be eliminated because there's no intent. So I think the discussion was good, and I think we've identified some aspects where I think we might have better clarification.
Sometimes we do second class because the senior advocate always gets it out.
Yeah, that's right. I mean, yeah, we are satisfied, that is fine. And as I said, there is always room for improvement. This interaction always helps, whether in this budget, future budget, and always very useful.
Once the budget is, once the budget document is in the hands of the FM or after seeing the reaction?
No, just before the budget exercise, I had some medical issues. After that, when I go home, I don't think about the, I just sleep and do it.
Yeah, I think you've been a bit unsparing in terms of your criticism in the past budgets. This time you seem happy.
Not much to at the time in budget.
But for me, the key takeaway today is, Ramesh is very open mind and respect for IFA. When it has to point out any issues and any drafting documents that you think need to be toned up and need to be beefed up in order that there are no interpretation issues that right. I think that's pretty welcome.
So he has not told me any. He is holding a conference tomorrow morning and charging 6,000 rupees. Here he will tell his client, and he has not invited me to listen to those.
Yes, there's a recorded version.
Yeah.
I got to prepare for the afternoon session.
For lunch tomorrow. A special thanks to but a special thanks on behalf of the management to transfer Ishita, the entire team that has put it together, initially everyone, a big hand to the organizers. Really, it's a pleasure to be a part of this and I'm playing on behalf of everyone. Over.
Thank you, Arun. Thank you so much. I'll not take, I know it's very wrong for me to stand between all of you on a Friday evening. Just take a few minutes to thank the entire panel, all the speakers, especially the guest of honor, Kamlesh Watman, who, despite his schedule, always takes out time for the IFA sessions. And as today, for providing the insights on the budget and lend credence to the government's perspective on this. I'll be failing in my duty, of course, if I don't thank Mukesh sir and Ajay sir, who, first of all, have given all their unwavering support to every session, IFA session that we've had, especially to all us youngsters. And of course, today for the budget session for giving their input and insights to this. Vijay sir, thank you so much for giving your insights on the transfer pricing provision and the other budget provision, without which it could not have been a success for all of you. And Arun bhai, thank you so much for coming all the way. Every time he flies out, this is the first time we're having after 3 years a physical seminar. And thank you so much. He's actually nursing a back spasm right now. So cheers to you, sir. Thank you so much, everyone. And thank you to all the audience and everyone. And my co-conspirators, Ishita, Smita, Sushil sir is right there. Neerji, today. Thank you so much, everyone. Thank you. Thank you.